This is Center Stage, putting your firm in the spotlight by highlighting business owners and other industry experts to help take your firm to the next level. Hey everyone, and welcome to Center Stage. I'm your host, John Henson, and this week we are talking about your firm's finances and your bookkeeping. And I know that that is something that a lot of business owners tend to try to handle themselves. And maybe if you didn't go to school for business or you don't have much of a financial background, that could be just an entire new world of things that you have to learn and deal with and think about on a regular basis. I mean, I know because I managed Spotlight Branding's finances for a few years before I came over and I got to do things like this all day. So I do know some of the struggles that you deal with, and I'm really excited for this conversation and some things that we can learn about. This week, I am joined by Peggy Gruenke from CPN Legal, and I'll let her tell everyone a little bit about what they do, but a really great firm that helps law firms out with their finances. And so, Peggy, thanks so much for joining us.
Thanks, John. Thanks for the opportunity to meet some of your guests, your audience out there, and teach them a little bit about what we know of and see when it comes to the world of finances for law firms. Now, my background is I've been in legal for about 25 years, director at bar associations, managed law firms, and eventually landed into this niche, very niche business of we just do bookkeeping and accounting for law firms across the country. We have over 300 clients. And I have a staff of 23 people here in Cincinnati, bookkeepers and accountants, and we love what we do. So we build a business helping people all the time with their books. And we see a lot of bad things when we start taking over books for clients. We get it all cleaned up, and then we keep them on track. So we don't want them to have any bad experiences. So it's a pleasure being here. So thank you, John.
Absolutely. So I mean, I want to dive in, and I know this is a really loaded question because, I know you've seen a lot in the years that you've been doing this. But I mean, what are some of the biggest and most common issues that you typically see with law firms who bring you their books that are all kinds of messed up and that you have to clean up?
That is a loaded question, so I will try not to take the whole 30 minutes up explaining this, but let me go over a few things. First of all, I want to start by saying, law firms are simple businesses. They're not complicated businesses, and they can be very profitable. Okay, so I want to point those two things out. They're simple businesses, and they can be profitable businesses. All right, but you have to keep your eye on the 8 ball when you're running your practice. The other thing that I think happens when we start working with lawyers is what I call are accidental entrepreneurs. When they go off to start their own business, which we saw a ton of during COVID, right? People started up a lot of solo practices. And when they step into this world of being a solo or starting up their small firm, and they forget that they're really running a business. They like being the lawyer side of it, right? But then you bring into the business side of it, that's where they kind of falter a little bit. And that's why we're there to help. But to answer to your question, some of the biggest issues we see are letting your paralegal be your bookkeeper. Paralegals weren't designed to be bookkeepers. They're there to help you with the legal side of your business, not the bookkeeping side. And since I managed paralegals before, and I see this when we take over new clients, they don't like it. Okay, they don't like being the bookkeeper. They prefer doing the other side, and it actually can expose your business to people that you might not want to have them see everything about your business. Okay, so that's something that we like to have people avoid. The other thing is when we take over law firms and we get into their books, this concept, and most of our clients use QuickBooks Online, so I should premise that. Sometimes we get people that have never used anything, so we're setting them up for the first time. But for the most part, they've been using some sort of financial package, whether it's QuickBooks or Peachtree or something like that. But they've never taken the time to actually reconcile their bank accounts. And they always ask me, why should we reconcile the bank accounts? Well, if you want a true picture of your finances and your expenses and your revenue, you have to reconcile your books every month because you might have duplicate entries in there that are overstating your revenue. which
Yeah.
we see a lot when we take over the books from law firms, and you're paying taxes on that. So you might as well
Yeah.
get it cleaned up, right? Um, and you might have duplicate expense entries. So there's a lot of good reasons why to reconcile your bank accounts and get them cleaned up every month. Um,
Yeah,
yeah.
and one thing real quick on that, I had mentioned at the top of the show, like I did this for a couple of years, and like I'll admit, I hated reconciling bank accounts because it was one of those things. Like it takes a little bit of time,
Uh,
especially if you're not, naturally, sort of skilled in that sort of thing. But if one number's off, you got to go down this whole rabbit hole to try to figure out why aren't my numbers lining up. And then to your point, it's usually because either, one transaction from your credit card statement didn't get imported into QuickBooks and you got to go and track that down, or maybe it's a duplicate expense on the
yeah.
other side. And, whether it's, a $3 purchase at Starbucks that you're putting on your expense report, or it's a bigger, $500 equipment purchase, that's, you want to make sure it's on there because to your point, you're paying taxes on it, but you also don't want to misrepresent either how much money you actually have or don't have, depending on
Right.
if it was a missing charge or a duplicate charge. So yeah, I totally know
Yeah.
where you're coming from on that.
Exactly. And to the point of reconciling, lawyers are simple businesses, but they're unique businesses. And
Hmm.
they're unique because they have something called a trust account. And we'll get
Hmm.
into that a little bit more in a minute. But the thing, some of the bad things we see, you asked that
Yeah.
question, is no one's reconciled their trust accounts.
Mm,
Okay. So the trust accounting can, if you get audited, you can lose your license to begin with. And
right.
California just released really strict new laws about trust accounting and audit rules. So be aware of that.
Mm,
At CPN Legal, we have a really tight process for managing trust accounts, and we do a trust three-way match every month to make sure you're in
mhm.
compliance. But when we take over law firms, that is the mess we see right away that we have to get cleaned up, is making sure their trust bank account matches their liability account and matches
Mhm.
what's inside their law practice management software system. That's the three legs of a three-way match. Okay.
Yeah. And so
So
now forgive my ignorance of, because we just, as a marketing company, we didn't
yeah,
have the trust accounts. Is that the
yeah.
same as the escrow, or is that
It
a different thing altogether?
it can be, there's a couple different terminologies. The IOLTA account stands for something about interest on lawyers' trust accounts. So
Mhm.
that's a particular type. When you set up at the bank, when you set that up, you actually have to register it through the State Bar Association. Okay, your
Okay.
trust account has to be registered, so they know it exists.
Mhm.
Okay, so when a check bounces, guess who's the first person that gets notified? The State Bar.
Mhm.
All right. And then you get audited, right? Um, but escrow accounts are usually terminology we see with real estate.
Got it.
So you can have an escrow account, which is can also be treated as an IOLTA account, but an
Mm,
escrow
okay.
account may be allowed to earn interest and
Okay.
kept. IOLTA accounts can't earn interest. It's an in and an out every month. They're not allowed to make money. They're not allowed to make money off of client funds,
Got
right?
it. Got it.
Okay.
Awesome.
And you need to just step on that one further point
Mhm.
on that trust account stuff is you need a really good law practice management software system that also helps you manage your client trust funds,
Yeah.
as well. And our clients, most of our clients are Clio clients. We got my case clients too and Practice Panther, but those products integrate with QuickBooks.
Mm,
So they
yeah.
talk to each other. So
Yeah.
what happens in one has to happen in the other, and that's how we tie them together.
Yeah. And also just, it makes your life a lot easier because you can kind of have all of that in one central hub,
Yeah,
one kind of dashboard sort of thing. So you can kind of see, you're not having to go back and forth between windows and trying to make sure that everything is lining
yeah,
up.
yeah,
Um, yeah, one of the things that I see a lot, especially with, a lot of the clients that we deal with, a lot of the big like financial concern that I hear a lot is around cash flow, and on our side of things, we can kind of say, well, it's kind of a marketing issue because you start marketing, you get a lot of clients, and then you stop marketing because you're so busy. And then when that work dries up, you don't have anything to replace it. And so you kind of get these ups and downs. Um, do you have like any sort of tips, whether it's kind of maybe even a report that you can generate in QuickBooks or some sort of projection that you can set up that can help a law firm better understand and maybe project their cash flow?
Oh, definitely, we do. We, and to Those are great questions, John. And cash flow, you can't talk about cash flows unless you also talk about AR and billing, okay?
Mm,
Because all
yeah,
three of those go together, right?
yeah,
Now we develop weekly cash flows for a lot of our clients. And what that means, and it's a really great tool because it forces them to look at their books every week,
mm,
right? They actually can see what has happened in the past, and we can project out what's going to happen over the next 4 or 5 weeks and if they're going to have enough money in the bank to cover expenses.
yeah,
Okay. So when we do a cash flow report, we look at the beginning balance, your operating account beginning balance, right?
yeah,
What revenue came in or is
mhm,
projected to come in, and then the other part of the cash flow is the outgoing money. What's
yeah,
scheduled to be spent out of the operating account, right? So it might be payroll is due that week, rent's due that week, credit card merchant fees are going to come out that week, right?
yeah,
Your credit card payments are due that week. So if you add up all those expenses, at the bottom is going to be what's left in the operating account. Is it negative? Well, then we got a problem. So we got to look at, you know, can we move some things around? But more importantly, to prevent that negative from happening, is we've got to figure out how to get the cash in to offset those expenses. And that's where we talk about billing. So
yeah,
we're billing experts. That's what we do for a lot of our clients, and they love it because we keep them accountable. Your invoices, it's the first of the month. Your invoices need to go out. They need to get prepared. We need to move trust funds, which I'll get to in a minute, to pay
mm,
those bills. But then the bills need to get sent to the client, and we need to make it easy for them to pay, right? So that's where, on the billing side of it, that all ties into your cash flow because and lawyers are terrible about invoicing. So the value that we bring, hands down, the first thing clients will tell us is we improve their cash flow by helping take over their invoicing.
mm,
Lawyers hate to do their own invoicing. Okay, so
right,
that is where the cash, the flow of that cash flow comes in is by good billing practices, right? Then the second one is your AR. So when we
mhm,
build out that cash flow, we're projecting what your AR is going to be and what part of it's going to be collectible. Now, you ask some of the worst things we see when we take over law firms, it's usually AR. It's
mm,
been
yeah,
ignored. It's really old. So the first thing we do is we go in and have a gut check with this lawyer and say, this stuff's a year old, 2 years old. You are never going to get paid on that. Let's get it. Let's write it off. Let's get a real live AR report. What is really collectible so that we know we can project your cash flow based on your good ARs, right?
yeah,
Now, the other thing about AR is let's try to avoid it in the first place. So
mm, yeah,
so some of our most profitable law firms are really good about getting trust retainers in. And I don't know if your audience, well, if lawyers are listening, they'll know
oh
what that
yeah,
means. Yeah. By getting a retainer in, putting it into the trust account, and then billing against it. So they're paying themselves the day they do invoicing, right? And
yeah,
so there is no AR to worry about. But the second part of that is you have to replenish their trust account if
yeah,
they've used it all up, right?
right,
Especially when you get into areas of if you're doing litigation or we have a lot of family law clients, and family law can be a huge black hole, but you have to
yeah,
be really diligent about establishing in your fee agreement letters this concept of you need to pay a retainer and we need to replenish it when it reaches a certain dollar amount. Okay.
yeah, yeah,
So we help them manage that whole process. And that's what helps eliminate AR in the first place. Okay.
yeah. And I love that. And I was going to ask about, things that firms can do to improve the collection percentage. And so, the retainer is great in billing themselves out of that. But when it comes to actually invoicing, you mentioned that that's something that a lot of law firms struggle with. I mean, I know how it works for us. We have this platform that we use that automatically creates invoices and automatically sends them out. Is that something that a law firm can do? Is that something that, I know QuickBooks has the ability to
Yeah.
generate invoices. Is that something that you recommend law firms set up so where it's almost like they don't even have to think about it? or
Yes.
is there, or is there like some kind of hurdles to go through because of the way that the fees are arranged?
Well, we with all of our clients, none of the invoicing is done through QuickBooks.
Mhm.
Okay, QuickBooks is not designed to handle client law firm billing the right way.
Right.
It's just not. So all our clients have law practice management software systems. So to your point, it does make it easy. So as long as they enter their time every
Yeah.
week diligently, right? We can prepare the bills right inside the software package, prepare the invoices. You can apply the trust funds. The invoice template can be designed to reveal all this information, and then you hit the send button right inside your law practice management software to send the bill to the client with a link to make a payment, right? Super
Yeah.
simple, super simple. It doesn't have to be difficult, but you have to set up your law practice management software system so that this is an easy process. It's
Yeah.
just doesn't happen by itself as most things. Yeah.
Right.
Yeah.
And one other thing that you mentioned, that I wanted to come back to, because this was something that I learned in part, is like, you have all these past due ARs, they're more than a year old. There's no way you're going to actually collect that money. So you talked about writing it off, and writing it off as bad debt. And what is, what's the benefit of doing that versus just leaving it on your, on your P&L or whatever the case may be, and just like kind of hoping that you may collect on it in the
Okay.
future? What, why would you
Uh,
write it off?
that's a great question. So just to clarify, law firms are cash-based businesses. Do you run as accrual-based?
Ah, this one was weird because talk about loaded questions. I know we had an accrual based P&L, but then we also looked at the cash
Okay.
P&L.
Okay. That's very common. So law firms are cash-based businesses. Okay.
Hmm.
So the cash is only realized when it actually happens. So there's no such thing as bad debt on a P&L statement on a law firm.
Okay.
It's not a tax benefit. When you write something off, to your question, what's the benefit of writing it off? It's all a mental thing. It
Yeah.
becomes a mental thing, okay? Because when you log into your law practice management system or QuickBooks and you see that you have your ARs at, like, pick a number, $250,000, they ignore it, okay, because it's too big, right?
Right.
And they're like, oh my God, that's way, I'm not gonna mess with that today, right? And so it becomes a mental thing. To write it off, the benefit of writing it off is for you to learn a lesson. So you've got to be better at managing clients so that you don't get into this position before. So that's what it really is. It's a
Yeah.
painful lesson to learn.
Yeah.
You had a gut feeling when you started working with that client. You should have trusted your gut, or she should have broke the ties sooner than later, right? So
Yeah.
that's one of the values of writing off that AR is it's a lesson to learn, right? It gets it out of the picture so that mentally when you look at your AR and it now says $25,000, that is a manageable number to go out and collect.
Yeah.
Yeah.
Yeah. Yeah. I mean, I can't even imagine, looking at like a past due, or, AR number that's that big, and see like, gosh, my firm could be $200,000 ahead of where it is now
Yeah.
if
Yeah.
I had just done this or this or this. Yeah. So yeah, it's got to be a real big gut punch on that. The other thing I wanted to talk about is, kind of more broadly speaking, is budgeting. I
Hmm.
think it goes without saying that if you're running a business, you need to have a budget for it. What does a good law firm's budget look like? Like, what kind of categories should there be? How often should they be updating it? What all goes into it?
Okay. It's a great question. So the budget all starts with what's called a good chart of accounts. And
Mm,
if people listening don't understand what a chart of account is, it's a financial terminology. It's set up in QuickBooks, and think of it as categories or buckets on how you're going to record income and record expenses. Okay. So we've got income buckets, fees earned for legal fee work done, fees earned for expenses that got reimbursed. Okay. Those are
yeah.
two different types of incomes. You want to get reimbursed for expenses you fronted on a client, and then you get fees for the actual legal work done. The other piece of that P&L, I'm going working through the P&L statement, right?
Yeah.
There's a middle section called cost of goods sold. Now that cost of goods sold section is really advanced client costs. So every time you pay a filing fee for an expert witness, you need to record that in a special GL account.
Mm,
We talked about budgets. A chart of accounts is they're called GL accounts. That
yeah.
that is pertains to that number. Okay, so you got that. Then the third part of your P&L statement is all your expense categories, your buckets. Marketing is the one we keep a really great eye on, and I'm sure you guys too. So when we work with our clients, we don't have a general one bucket for marketing. We break it out into website design, client acquisition, client appreciation, SEO, social media management, marketing software. Because when we know the importance of marketing to law firms, but we
Yeah.
also know the importance of making sure it doesn't get out of control. Is there
Right.
a return on this investment, right? So when
Yeah.
we talk about budgets, getting back to your budget question, we have to design a chart of accounts to reflect the budget properly. Okay. So then you also get into office expenses. You got software expenses. You got supplies. You got rent. You got utilities. You got co-counsel fees. You got payroll expenses. All these things have to be properly designed. We have a very great chart of accounts that we start with our law firms with. It's designed for a law firm. It has everything set up.
Yeah.
Then what we do is to create the budget part, and lawyers hate budgets. We like budgets because it gives you focus. All
Yeah.
right. And it gives you an idea of really what's going to happen. What do I want to see? So we're going to project out in your budget. What's your monthly projected income? Okay. Then we're going to go to your expenses and we're going to have them all broken out into the right categories now. So we can
Yeah.
budget for rent. We can budget for credit card fees. We can budget for all the marketing categories, right? And any
Yeah.
other supply, software expenses that are coming up. And then when we build the budget, we build it inside of QuickBooks. Okay. And the budget is not designed to be set and forget.
Right.
It's a real live document. So
Yeah.
halfway through the year, you might need to reset your budget. Okay. Either your revenue's not hitting it the way you thought, or you had a lawyer leave, or you lost some major clients. We need to reset it. The income
Yeah.
part and the expense part, right?
Yep.
So it's a good tool. Then in QuickBooks, there's a really good report we can run as part of our financial packages when we deliver them every month is a budget variance report. So where are you at actuals versus your budget?
Yep.
Okay, and that's kind of a fun report to look at when the revenue's higher than what you budgeted, right? And your
Oh yeah.
expenses are right on target, right? So that's the value of a budget is being able to set up the chart of accounts, the buckets,
Yeah.
to actually tell a meaningful story of your law firm. I
Yeah.
want to touch a minute on client
Yeah.
expenses, John, because this is a black
Absolutely.
hole. It's a huge black hole when we work with clients. So client lawyers are paying in advance filing fees, expert witness fees, process server fees. All these little tiny $55 fees, $150 fees add up quickly. And you're paying them, but we got to make sure when you wrote that check or put it on your credit card, that expense is also getting added to your law practice management software so that
Mm,
it shows up on a client's bill for you to get reimbursed,
yeah.
right? So we run a report the first of the month for all of our clients to compare what client expenses got paid out of QuickBooks versus what got added to your law practice management software. And there's always missing ones. The QuickBooks number is always higher than the Clio number, for lack of better words. So we know that
Yeah.
this is a black hole and it has to be watched. So back to you, the whole idea about finances is they got to be watched, right?
Yeah.
But you also have to have good reports to help you watch them, right?
Yeah.
So I just wanted to touch on that for a minute because it's a potential black hole.
Yeah, and it's so funny to me because, I mean, I've been working with lawyers for, over 8 years at this point, and one thing that I tend to notice, is that most lawyers, they have a very high attention to detail, but for some reason, the finances is just doesn't apply to that a
No,
lot of
it's not
time, like
fun. It's not as fun.
Right. Yeah.
Right?
Yeah.
Yeah,
I guess that makes sense. It's easy to pour over like a legal document or something, related to your marketing because it has to do more with, your area of expertise.
yeah,
But, but yeah, that finance is it. Yeah. And I get it. You look at numbers long enough and you have no idea kind of where they're coming from or what the context for them is. And you just
yeah.
glaze over really quick.
I
So,
I think one
yeah.
of our most, personally rewarding moments when I work with our clients
Mhm.
is when we do take on a new client who has a mess in their QuickBooks, and we clean it all up and we actually deliver to them their first P&L or their first balance sheet report, and they're
Yeah.
like, "Oh my god, this is amazing. I can actually see what's going on with my business." Right?
Yeah.
And there's so many great reports you can run to give them that information, but that's where it becomes really rewarding for us is to say, "Here's your three-way match. It's all in balance. You know, here's your
Yeah.
P&L. This is what's going on in your business." And they've never seen these type of reports, which just is a moment I can't. I'm like, really? It's like,
Right.
really? But that's
Yeah.
okay. We're there now, so it's all good.
Yeah.
One thing I also want to say about ARs, if I got another second or two on that,
Yeah.
is
Absolutely.
um, you you about improving collection. So when you do have AR that you do have to get collected, I don't lawyers, you should not be collecting AR. You this is a task that should be delegated. Okay? You do not need to be in the weeds having conversations about a client that's not paying their bill because it's going to become very argumentative. They're going to
Mhm.
say things they don't like about your service and you're going to try to defend yourself. There's a lot of things that can happen. So we do a lot of AR collections for our clients, and it's actually kind of nice because they're now out of the picture. It's in our hands having a conversation with a client. Please pay your bill. Can we set up a payment plan?
Mhm.
Very because AR it takes time,
Yeah.
and it's easy to ignore because of that. So I say when you're looking at your AR, the best thing maybe that is something your office manager can do, your legal assistant can be doing, but someone you outsource it to somebody. But that is not a task that a lawyer should take on themselves.
Absolutely. Yeah. I mean, we talk a lot about delegating. I mean, not just yeah, I mean, pretty much just delegating anything that you didn't go to school for.
Yeah,
You went to law school, you probably didn't, you may have taken some business courses here and there, but probably didn't get into like, you know, detailed accounting courses, probably didn't take marketing courses, being your firm's receptionist is probably well below your pay grade and all that kind of stuff. So delegate those things out.
yeah,
And I mean, even just talking to you, I can see a very obvious connection between, if you're trying to do your bookkeeping yourself and you don't have the frame of reference for it, you're just trying to keep things moving, delegating that off to an expert who can pay closer attention to it, who knows the ins and outs of it, especially working with other law firms and knowing what they're seeing, can absolutely result in more financial, not just stability, but even growth for
yeah,
your law firm.
yeah. So a lot of on the growth side of it, it's fun for us to start with a solo lawyer and watch them grow, right?
Mhm.
They're like, "Hey, I'm gonna make my first hire. Now I need payroll. Well, let's get you set up on payroll so we can pay your person, right?" And then it's like, "Well, I need to add another associate." It's kind of fun to watch that evolve and
Yeah.
see their revenue increase each month throughout the year with the evolution of their business, right?
Yeah.
And they'll come to us and say, "Hey, I'm thinking about hiring an attorney. Can you put me in a projection if I pay them 60,000 a year or $70,000 a year? How's that going to affect? What do I have to change on my billing side to cover that cost?" The other thing that we do a lot of, which is fun, is we do profitability reports, right?
Yeah.
So on cases, on matters, and are particularly flat fee cases, a lot of lawyers like flat fee cases because they don't want to enter their time, but you still have to enter your time because what
Right.
we have to come up with is the flat fee that you're charging really a profitable venture for you, all right?
Yeah.
Based on the time that it took you to actually do the casework. So that's the fun part is getting into the analytics of things, which you can
Yeah.
only do if you have a good law practice management system and you're actually capturing data up front. I'm a computer science major. How I got into law firms, I don't know. But so I did a lot of coding and I did database design, right? So getting that whole data piece is important. I
Yeah.
see the relativeness of that. Yeah.
Yeah. And I'm so glad you brought that up here. Because in my experience, what I've seen is that lawyers tend to just kind of arbitrarily set their rate. Like
Yeah.
they don't really have a good reason for why they did it other than like, well, I heard that this other lawyer is charging this amount. And so being able to set a rate that makes your firm profitable and then understanding by how profitable it will be, I think is a really, really important tool that people should be utilizing a lot.
Yep. The other thing, if on that note,
Yeah.
is thinking about realization. There's realization rates. And we talk a lot about there's collection rates, there's billing realization rates, and the understanding that when you bill for a client and you're sending out their bill, and let's say the bill's for $1,000 and it had time entries on it, so that's the amount that's got entered. But by the time you write some off, which is a bad habit lawyers get into, is writing stuff off. Okay. So now you got what's called a billing realization. And that's the difference between what got entered to be billed and what actually showed up on a client's bill, right? And then you
Yeah.
have your collection realization rate. So those three things all tie in together. My moment about writing things off before a client even gets a bill, just stop it, because you're making a decision for that client that's saying, "Oh, I know that took 2.2 hours. A client's never going to pay for that." They might. Let them come back to you and say, "Hey, I'm looking over my bill. Did that really take that long?" And then you can apply a discount, okay? But
Yeah.
writing it off isn't the answer. The answer is letting the client realize your value.
Yes.
You're predetermining your value before you let the client determine your value,
Yeah.
right? So that's another big one to think about.
Yeah. Yeah. And more often than not, lawyers will predetermine their value to be a lot lower than what it really is.
Oh,
And then you're
they
just
all
shooting
yeah,
yourself in the foot. Yeah.
yeah, that's true. Yeah, right. And then the other nice thing about rates, so for a minute about billing rates, right?
Yeah.
So in December, everybody increased their rates. I don't care what business you're in, but if you're a lawyer, you should have increased your rate because everybody else
Absolutely.
did, right?
Absolutely.
And you have to actually set that expectation when you do your fee agreements, that if it's in a litigation case that might go on for a couple of years, your rates may increase every year, right? But you got to set that expectation with your clients at the time of the engagement about the rates, because you have to be pre-disclose everything, right?
Yeah.
But don't be afraid to think about your value and increase your rates, and then let the clients gauge that. Okay. And I
Yeah.
always, when I managed law firms, the pet peeve I always have is the lawyers were going to increase their rates that year $5. I'm like, no, stop. $5 is
Right.
stupid. Okay,
Yeah.
if you're going through the pain of notifying your clients you're going to increase your rates, let's make it an increase.
Right.
$10, $15 an hour, but make it something that is uh is worth the effort. In other words, because it's a lot of work to increase your rates to
Yeah.
notify clients.
Absolutely.
Yeah.
Yeah, and I love that point. And I actually talked with Moshe Amsel, who runs Law Firm Profitability Coaching Group, and we talked all about why you should raise your rates and like what would happen if you did raise it, and like
Yeah.
the fears and overcoming all those setbacks. And so I don't have the episode number in front of me, but I mean, obviously, if you're listening to this, you can search it. It's a little bit farther down on the list. Definitely give that a listen. But as we wrap up here, tell us a little bit about more about what CPN Legal does and how people can get in touch with you if they're interested in working with you.
Sure, John. Thanks. So we operate as a arm of your law firm. So we're there to do your daily bookkeeping work, making sure that what happens in QuickBooks is categorized correctly. We make sure that any revenue that's coming over from your law practice management system is also reconciled out every week. We make sure your trust accounting is in balance every week. So we're the eyes on your business. Okay. And we're in your books with the goal being the end of the month to be able to produce for you a really solid set of financial reports. And then we also do a lot of custom reports for KPI reporting.
Mm,
And a lot of our clients, to the marketing point of view, is when we do financial reports for clients, we can look at their spend on marketing as a percent of their revenue,
mm.
and we'll say, hey, you're only spending 3% on marketing, but your revenue's this, we got to balance here. You need to be willing to put some more money into this marketing to increase your revenue. So we like tie it together. But then, so the other thing, so we do special KPI reporting. We do a lot of conversions, software conversions, for people, and setting up QuickBooks, rebuilding QuickBooks, cleaning up the messes they might have. This is a busy time of year for us because
Oh, I bet.
we're getting law firms come to us that, it's end of the year, my accountant needs reports. So, but we love what we do. We have a great team. Like we don't hire any contractors. Everybody I work with is employees of CPN Legal. We're in Cincinnati, Ohio. We all work together here and help lawyers build a better business. That's our goal.
Awesome. And how can people reach out and get in touch?
Check our website out, cpn-legal.com. Check out our team is on there. You'll appreciate our office dog is on there too, Jasper. So, but it has all the information they'll need to get hold of us, a little bit about what we do, and why we like doing it.
Awesome. And then one final question for you before I let you go. If you had one final piece of advice for our audience, what would it be?
Well, that's a loaded question, John. I I would say be prepared. It's the Boy Scouts motto, but I say that because when COVID hit and everybody was trying to get PPP loans, they didn't have a P&L. They didn't have
Mm,
a balance sheet, and all these were
wow.
documents that they had to submit to get loans,
Oh,
right?
yeah.
So
I
they were
remember.
all scrambling and we were really busy. So
Yeah.
my motto is be prepared because you never know what's going to happen. And on top of that be prepared notion, we always advise clients to try to get a line of credit sooner than later because you don't
Mm,
want to be trying to get a line of credit when you need it.
yeah.
You wanna be getting it ahead of time so there's a little bit of cushion there in case you need it. But
Awesome.
that's my last advice.
Love it. Awesome. Yeah, a ton of great information here. I hope that you out there listening feel inspired to clean up your books. And if you're trying to do them yourself, you're thinking about delegating that out to someone who does that all day, every day. It's really going to help your firm go a lot farther and become more profitable. And so, Peggy, I do appreciate it. I love all the insight that you gave, and thank you all out there for continuing to listen. Please leave a rating and a review wherever you're consuming the show. And that's it. We'll see you next week. Peggy, thanks again.
Thanks again. Bye-bye.
Thanks for listening. To learn more, go to spotlightbranding.com/center stage.